Big breaking news. Best Buy stock climbs 15%. Is the retail consumer back on the climb? Let's take a look. Best Buy reported better than expected earnings on Thursday as the company worked towards turning around its sales slump. For the first quarter, the company said some of its biggest growth drivers came from gaming and computing. Surprise, surprise. Partially offset by a decline in appliances, probably related to the home improvement sector. Not only has Best Buy grown their sales 2%, many retailers have actually been reporting good earnings. Let's take a look at another one here. Kohl's is another one we're going to pull up, 18% today. Kohl's was up as much as 20%, as they are saying sales trends are improving as well. Now, Kohl's was known as the Amazon return store, but somehow they're starting to pull it together. The CEO, Michael Bender, said the company is knocking on the door of growth. We are showed that we are managing the business with great discipline, strong expense management. Our inventory is much cleaner, which is good because Kohl's had a lot of weird stuff. They're still losing money per share, but they're narrowing that gap. They think that the trajectory for Kohl's is a meaningful improvement, and families are sitting around the kitchen table trying to make life work, particularly when the backdrop of high energy prices, labor market challenges, and it means that they're shopping apparently at Kohl's. And finally, we've got one more store to show. And finally, we have the dollar store, also up 15% today. They have adjusted their earnings per share, lifted their forecast, and the stock jumped right now about 15%. They are saying that favorable freight rates, better markup on products, and a reduction in shrink lifted gross margin has helped their business, and they were also helped by the tariff-related expenses. Remember, Trump's tariffs got shot down in the Supreme Court. However, I do think it's a little weird that they're saying freight is cheaper when gas is clearly higher, especially diesel. The company has steadily rolled out a multi-price model, stocking merchandise at $3 to $5 rather than clustering around its historical $1 price point. The company ended with 5,900 stores. So basically, folks, you have kind of a confluence of different types of retailers. On the high end, we've got Best Buy, which is, again, electronics, appliances, headphones, washing and dryers. On the medium end, we've got Kohl's, which you've got clothing, some sunglasses, shoes, women's clothing, colognes, kind of a little bit less than like a Macy's. And then on the bottom end, we have Dollar Tree or Dollar General, which is items between $1 and $5, candy, cookies, frozen meals, things that you can use, butter, cheese, kind of a quasi grocery store, convenience store. I'd put, little toys. So we're seeing some strength from the consumer, and there's a lot of doom and gloom out there, but you do need to make sure you pay attention to the corporations. If you want to learn more about business, you want to follow what the CEOs of the companies are saying, because they're actually on the front lines, not anecdotal people that go to the grocery store and say everything sucks. Now, those people are important too, because they are the U.S. consumer, but if you want to get good at making money in business, you've got to be able to decipher the signal from the noise.